Hi everyone, delonewolf here and welcome back to EVE Talk, your weekly look at the market in EVE Online. When it comes to news for EVE Online, I think it's gonna be time to start and keep a little bit of an eye on the test server. From what I've read over, I think it was last week, maybe a little bit longer than last week. It looks like the new Photon UI is going to become the standard one and no longer an opt-in feature, but rather just this is the new UI and everyone will be using it. Definitely a big change for those that have resisted switching over to the Photon UI. Takes a little bit of getting used to when you first started out. So I would actually recommend that you still take a quick look on CC and play around with it, or just switch and set your UI the way you want to. Another thing, I received a mail to join the closed beta for the Excel plugin that's in development for EVE Online. I think it is potentially very interesting. I also saw a post on it on the subreddit, so I think it's definitely okay to mention that. It's something that CCP is planning to do, developing together with Microsoft, and I think for instance what I do, try to keep an eye on the market. It could have a lot of potential. Will I join the closed beta? Well, I'll try, but there's potentially like a time issue there, since it is going to come to the game anyways. I think it's planned to become a part of the game anyways. I'm not necessarily in a rush to get in on a closed beta. I don't mind having to take a look at it with the final product. And then of course, let's keep an eye on the development in EVE Online itself, where I think CCP is working hard on that Allegiance system. Hopefully we can get some news on that soon, for which again I'd advise everyone to try and keep an eye on the test server and announcements around all of that. Next up, I'll take a quick look at the New Eden store. So let's see what's happening over here. We still have the sale for some bundles that basically get you a skin together with Omega Time. Let's take a look at the services. Yep, they're here indeed, and that is it. Anything new or nope? Nothing new here. Well, Valentine's Day is coming up in like 10 days, so we can expect those skins to make it back to the forefront, maybe even a sale as well. But we also, I think, are in a period where things will slow down a little bit. Especially when it comes to active sales in the New Eden store on the website and things like that. And generally, this is also, it's definitely, there have definitely been years with exceptions, but this is a time when quite often peak has plexed towards the anniversary dates, where we usually see then a drop off towards the summer. So for those that are trading in plex, this is also potentially a time to start taking positions. But let's dive into that then. Let's get into the pilot services, and we are starting that one at 320. Like that, and let's get into that plex chart, or let's go straight into the sellers in GDA itself. 5.1 million, definitely a little bit less than last week, and then 4.8 million for the buyers. This gives us this type of a chart, and you can see here that we are going down in price a little bit after increased volumes that have pushed the price up. So that was the sale within the New Eden store, or that's the sale that's happening in the New Eden store, that basically drove a little bit of demand, increasing the price and increasing the volumes. We are normalizing, and we are bringing the average prices back below 5 million as well. So as I've said here, quite often February, March, and then towards April, you do start to see a decline in the price of plex. Will that happen this time? There is absolutely no guarantee. There have been years where this has been the completely wrong thing to do, and that the summertime was actually like high points, and then you had the fall slumps and things like that. So it is all over the place, but quite often that has been a pattern where after the summer you get a stronger period with stronger demand. You also get all of these sales, so lots of people are actually active in the plex market. That creates a sort of a high point for the plex market itself, and you can see here how April was also the lowest point, which of course here is a bit of a false positive, because this was also still the period before the increased real life prices. But this pattern basically where it would actually be a decline that would come down here is something that I've seen quite often. Next up, the multiple pilot train certificate, also of course very similar pattern here, so don't make this out to be, well, this is what happens every year. Now of course this is quite unique when CCP actually increased those real life prices, but we are again seeing a little bit of hesitation here at the tail end. 5-day moving average staying below 20-day moving average. You can see how a couple of those minimum prices on a few days dip below 1.75 billion as well, so there's clearly hesitation here to make new highs or to go parabolic over the 2 billion or anything like that for the trade certificates. We're at 1.9 billion for the sellers, 1.8 billion for the buyers. Skill extractors then had a much bigger slump before. You can see that here, the plex jump here. We had this slump that was, I think here, basically a little bit of a response to this. So we've got the skill extractors that dove down below 400 million ISK, which was of course on these types of volumes a big sale, not in the New Eden store where you could like get them for cheap, but probably on the website where you could just pay less money in order to get skill extractors. We have recovered but to 500 million ISK, so clearly losing a little bit of ground. We're basically back at the prices of August. So this again to me is another indication that perhaps we are starting to hesitate, look forward towards the 20-year anniversary of EVE Online, right? What happens between now and then? Well, there have been some announcements, but if the Allegiance system, for instance, doesn't really bring in a lot of options and all that much hype, we may be in for a calm period with not too many sales, not too many special events, and we have to wait up until April, where then the summertime comes in. So hesitation is not abnormal, I think, at this point. The impact on the injectors then here are the large scale injectors that are, well, also pretty much flat for the last couple of months at this point, slightly increasing in price, but again coming from a bit of a response to that skill extractor dump that or sale that happened. So we get from 940 million, we went down to a low point of 870 million. We're recovering from that, but we're not able to catch that high point again. We are at the moment at 946 million though for the sellers, 880 for the buyers, so that's a little bit more spread between sellers and buyers. And you can also see with these average prices that let's see if that is indeed a bit, yep, so the sellers managed to get up to here, but that we actually have action happening on both sides. Both sellers and buyers are actively trading the large scale injectors, creating these average prices that are slightly dominated by the sellers, but not completely dominated by the sellers. Those minimum prices are actively being traded as well. The small scale injectors then are actually showing a different side of the coin, because they're actually coming down and then not fully recovering. 5-day moving average staying below that 20-day moving average as well, staying below 190 on the chart, 187 for the sellers, and look at that, 171 for the first buyer, 167 for the next one. There will probably be a little bit of action in the Tranquility Trading Tower, yeah, but it's like one other buyer that's competing with the 171, then it's 167, and then it's 159. So there's, I think, a little bit of exhaustion in the buying power of people at these very high prices, which is starting to, in my opinion, translate into hesitation, and that could, this is pure speculation of course, on not enough hype with what CCP is planning for Q1 of this year, start a decrease in price for the pilot services. That is actually the scenario that I'm starting to keep in mind when it comes to what I want to do myself. Next up, we still have the daily alpha injectors. These have made their way above 50 million, and now you can see that here the buyers are giving up when it comes to trying to grab cheap daily alpha injectors. Those minimum prices are increasing towards the 50 million as well. We are now at 53 for the sellers, at 49 million for the buyers, which again is going to be interesting to see if CCP decides to intervene or not on prices above 50 million ISK. And then finally, we've got the hypercores that are also showing signs of a little bit of exhaustion here, right? Making a new one-year high point, touching that 600,000 ISK. But then we are clearly starting to hesitate with now 5-day moving average going below the 20-day moving average. And we are starting to see that pressure here as well. 559 for the sellers, 516,000 for the buyers. That's still less than 10%, so there is still decently strong pressure from the buyers here. No sign that is getting completely gutted like with the small scale injectors, but yeah, it's not really that uniform push up that's happening here anymore. Next up, we have the minerals, and they are coming in at 1020. There we go. Let's get started with titanium. Not good news for titanium here. You may already have seen that on the ticker as well, where we are seeing more pressure and we are getting closer and closer to that 4 ISK mark. We are now at 418 for the sellers. Buyers coming in at 412. They're still above 4 ISK, but you can see that the 4.5 and up days are unfortunately long gone. And even during the periods when the averages were close to 4.5, you could usually sell your titanium above 4.5 ISK. So we are clearly seeing a little bit more pressure, unfortunately, on the prices of titanium. Then for pyrite, that's very bad data point. Let's see if I can get the chart to show anything here. We are continuing to see that pressure as well. Had a little bit of relief last week, but it gets squashed, unfortunately, very quickly. So we're still above the 10, but you can see the minimum prices are starting to go below that. 1063 for the sellers, 990 for the buyers. Definitely lower prices here as well, which is then confirmed, of course, by Mexlon that had continued that trade last week and the week before that and the week before that as well, going through that 60, I think, without too much trouble. And is at the moment selling for 59 for the sellers and 55 for the buyers, getting close to that 10% margin here as well, keeping that gap alive. So for high-sec miners, unfortunately, bad news. Perhaps it is a little bit less activity, although the monthly economic report showed, I think, pretty large activity in the game in general, so it could be a little bit of exhaustion when it comes to like capital production and things like that, or perhaps there is now just more supply and things in general for minerals are not all too bottlenecked in production in general. Perhaps there's also a little bit of exhaustion with players to keep up with those with that grind for the points for their alliance logos. That's if everyone takes part in that, that's a big faucet for ships, so for stuff and thus for minerals. That could have increased demand. If that starts to teeter a little bit, a certain percentage of players saying, I've got enough, I've got all the logos that I want, maybe some that have really rushed it, always grab the biggest ship possible, or basically done. They've calculated, I've got all the points I'll ever need, and as a result we might see a little bit less demand from the production side as well because of that. And can low-sec counter that trend? Well, for Isogen, a little bit of pressure, but still healthily above the 500. You can see that the minimum prices, though, from time to time start to touch that point again. 525 for the sellers, 503 for the buyers. Still pretty strong, though, just holding on decently well to its current price range. And then we got Noxium, which I think last week was declining. Yeah, for Noxium, bad news if you're looking for high prices. Good news if you're an industrialist and you're looking to make your ships, at least your Tech 1 stuff, a little bit more cheaply. Then we are now below the 900 ISK, 878 for the sellers and 820 for the buyers. That's definitely a pretty sharp decline here as well, after Noxium managed to make its comeback to 1100 ISK, which I think here was around this time that CCP decided we're gonna rebalance a little bit to solve some of those mineral bottlenecks, although they were focused, if I'm not mistaken, to Isogen, Megasite, Zydrine and Pyrite. So let's get into that Zydrine chart that is also sharply declining on more supplies, breaking the 2000. That's interesting. 1943 for the sellers, 1824 for the buyers. What felt like something that could become a structural situation, 2,500-3,000 disk for Zydrine, because this is of course dominated by nullsec, which is very organized and is able to make cartel moves on the market. It looks like nope, that's not what's happening here anymore. A lot of supply coming in, a lot of dumping of Zydrine, pushing the prices down, losing a third of its price over the course of about 2 months. That's a pretty significant decline in price and thus in cost. Kind of mirroring, I would say, like a real life situation as well, where like energy prices really exploded after the invasion of Ukraine, and then everyone adapted to it, and now we're back at the prices before that, despite the fact that, as far as we can tell, nothing is fixed. Same story here, I would say. I can't really say that there are no more rumblings in nullsec, so people are not expecting destruction there, or that there's a reason why they're not making as many capital ships as they were about 2 months ago. This price is sharply declining, perhaps just because it's not sustainable and everyone is adapting to that. And then you add a couple of smaller factors, like for instance a lowering of the faucet of ships through the Paragon system and things like that, and perhaps this is the result. But it's a pretty sharp decline. A third of the price in 2 months is definitely a lot. And then Megasite is, well, maybe starting or maybe holding on better. That's really going to be the question. It is below 2.5 though, 2,415 for the sellers and 2,200 for the buyers. That's also 10% margin opening up here between sellers and buyers of something that is usually very much dominated by the sellers. That is not insignificant. I actually now want to see the the spread, excuse me, here 1943 to 1824. It's over 100 disk on a sharp decline as well. I would say there is a very big spread, an unusually big spread for these nullsec minerals at play here. And then we've got Morphite that is holding on to 40,000 disk pretty easily, 41k to 39,530. So that one is not moving, but for Tech One, this does mean that we are looking at far cheaper minerals. Now for the capital ships, let's see if there are signs of exhaustion here as well. Let's move on to PI at 1650. There we go. Let's get started. Here are the broadcast notes, and well, that's not a sign of exhaustion. We are actually making close to another 1 year high point, at least on a 5-day moving average. I think we're at the highest point of the year, hitting 2.4 and well above that million for the sellers and almost 2.3 million for the buyers as well. So the broadcast notes are still super expensive. Our construction blocks, that's a sharp decline, with today's data point being kind of weird, but let's see where we're at. 9,943 for the sellers, 6,4 for the buyers. All right, that's definitely, in my book, really interesting. That's a big gap between sellers and buyers that opened up. So perhaps someone came in and dumped like 500,000 units to the buy orders, pushing it down to this price or something like that. But that's a big gap. We'll see, of course, if new buyers come in that are willing to pay those higher prices. And let's see what the others are doing. Coolants also dropping down below 10,000 disk, 10,350 to just below that 9,786 for the buyers. And then what's interesting is the average for the last couple of days have been focused on the buy prices. That does mean that either there's too much supply now and there's enough people that are desperate enough to just sell straight to the buyers. Yeah, I think that's what I'm seeing in this. Not exactly that buyers are completely exhausted or anything like that. They're just getting filled quite well. Then we get enriched uranium also making its way below 10,000 disk here, 10,400 to 9,400 normal margin. But you can see that we are away from the amazing fall and early winter prices here, and we are now at 10k, which is, from my historical perspective, still the normal price, right? Construction blocks selling for 9.9, that's a good price. Coolants at above 10k, it's a good price. This is also a good price. So it's not that this is a bad price, but of course the incredible period of October, November, December, those times, they might be over. Let's see if we continue down the list. Integrity response drones though, So down at the more basic refined materials, we have a little bit of a decline, but when it comes to advanced PI materials for large ships, we are at a 1-year high point. Again, 3 million ISK for the sellers, 2.9 for the buyers. And then we get our mechanical parts. They are pulling back to 10,000 ISK as well. Above that with 10.9 for the sellers and 9.8 just below that for the buyers. Miniature electronics, which is also refined, so you can see that here as well, went above 15,000 ISK for over a month straight here in the early winter, and is now pulling back to, well, still a good price, of course, even on this 1-year chart and historically speaking, but 11,500 to 12,000 for the sellers, 10,000 for the buyers. Bit of spread here opening up as well. Perhaps there is some exhaustion, and again, when it comes to the advanced PI materials, we clearly have a very different picture. It's not a 1-year high point considering what happened in March here, but it is definitely again the highest point of like the last 9 months or so, at almost 1.4 million for the sellers and above 1.1 million for the buyers. Organic motor applicators pushing 1-year high point here as well, 1.15 to above a million for the buyers. Quite significant. Recursive computing modules falling back a bit, staying above a million, but this is from, well, maybe an early 1-year high point, you could say, on this one. So this is still definitely not bad. 1.2 million, above a million for the buyers as well. And then when it comes to our robotics, well, we're holding on, seeing a little bit of pressure despite huge volumes a couple of days ago. Maybe yesterday it says nothing, so perhaps this is like 2 days in 1 day that something went wrong there. But we're at 90,000 for the sellers and 88,000 for the buyers. Far closer margin than in the refined PI materials we've covered so far. So this shows that on this level there still seems to be that high demand, and then the level up from that is even worse. But rocket fuels, look at that, also starting to pull back in price. 14,000 for the sellers, 13,000 for the buyers. It's definitely a good price, but there have been occasions where you could sell above 15k as well, just in the last couple of weeks. And then advanced PI, again, self-harmonizing power cores, 1-year high point yet again. 2.7 million for the sellers, 2.4 million for the buyers. So this is a big change. Specialized PI materials, smart fab units here coming in at 100k, 80k for the buyers for something that doesn't have the best and most consistent volumes is definitely really good. Sterile conduits, advanced PI, so we're expecting a very high price. 1.5 million is definitely pretty high. Not the highest of the year, but generally the highest range for the year for sure. Supercomputers still doing really well as well, 120 for most sellers and almost 100,000 for the buyers as well. Synthetic oil is back at refined. That one is still doing quite nicely. 14,000 for the sellers, 12.8 for the buyers. I'm just going to go through the list here, but we can, I think, start to tell a trend here. 110 to 107, very narrow margin. Transcranial microcontrollers is 100,000 to 97,000. And then our water-cooled CPUs are actually going up in price a little bit, but they're not at 10k, so it's a little... Oh, there they are at 10k, 10,500 to 8,100. And then finally, wetware mainframes, which last week or about 10 days ago was at another 1-year high point, dove down on some selling, but look at that recovery. Despite never making it back to a more normal range for the year, we actually jump back towards 2.5 million. We're almost there for the sellers and 2.3 million for the buyers. So for PI, it's definitely the higher the complexity of the PI material. Now, the more expensive the price, the more narrow the margin. And once you get into advanced PI material, you even have a little bit of volatility that's starting to show up here as well at these crazy prices. But clearly a very big difference in the refined PI materials, where we are seeing maybe some oversupply. I think it could be oversupply here, because I'm not really seeing the crazy low prices for the buyers, or their numbers just completely declining into nothingness. So I think there's just oversupply happening in the refined PI materials. I may be partly the cause of that, because I did mention over the last month or so, I think, even that I was just selling all of my PI because these were extremely good prices, and yeah, then it might have become something like a self-fulfilling prophecy. But when it comes to the easy to make stuff, which is what I focus on myself, like refined PI materials, we are seeing a decline in the prices and a shift in the market, while at the same time we are seeing new high ranges for these advanced PI materials. And then those that are sandwiched in between there, such as the robotics, they're not able to make 100k across the board, but we are seeing 90,000 to 88,000. That's really a very narrow spread for something that costs almost 100,000 discs. So here I think they're sandwiched in between the two, and this is where I think this market will decide which way everything will go eventually. If there's too much supply coming in below this, eventually there will be too much supply here as well, and we'll start declining in price, and then everything should decline in price. But if there is really a bottleneck situation, then these could actually become a problem as well, go up in price. And then, well, we'll see. I'm still banking on that CCP intervention, and perhaps the market is as well, because clearly they're also harmonizing all of a sudden the water-cooled CPU with everything else on the refined PI materials market. So it's interesting. This definitely feels like there's change expected or happening in the market for PI though. Next up, advanced moon materials at 2540. There we go. Let's start as always with the carbides. Here is crystalline carbonite, and well, for those like myself that were looking for those highest prices to maintain itself in the cheapest stuff, and then to start to filter down to the more expensive, more complex materials, that doesn't look like that's happening. We went to 200 disc pretty much for crystalline carbonite, but you can see now that we are declining back to basically the same range as about a year ago, 150 to 122. Pretty healthy spread, or pretty large spread I should actually say here as well, which is normal on a decline like that. Probably quite a bit of supply taking advantage of these high prices. For Caldari, it's titanium carbide. That's basically back at the 150 as well, 150 to 142, a little bit less spread. Why? Because this one is just increasing in price over the last week. It basically found its range a little bit more quickly after a peak in December. And well, we're basically, I think, recovering a little bit more balanced. There's a bit more movement in all of this. Volumes are doing okay as well. So yeah, I was sort of hoping that we would be able to get to really high prices and then go through that. But look at Fernite carbide, did make its way to 150 as well. Starts the year at 125, and you can see here now we are normalizing to that range as well, 123 to 115. So basically nothing happened over the course of a year, you could say. Well, it sort of looks like that, but we were extremely cheap, so you definitely had jumping points where you could have made some ISK. And then we've got Amar, which is for tungsten carbide. Same story, also had a little bit of a crazy peak here just about 10 days ago, but supplies are coming in, and we're back below the 150, 145 to 140, and so basically we're back at the same price range as about a year ago. CCP's intervention here, as mentioned quite often before, but perhaps some of you guys are not up to date on that, for instance, came back to the game, is that they nerfed the output of moon mining by 25%, which happened around here, of course, on the market, in order to protect the value of stuff that was mined there. That was basically what they mentioned when they did that intervention. And well, from this chart, it looks like, well, it was a slightly bumpy ride, and we got a little bit of a speculative high. It looks like they basically succeeded, and we are back at that same value as what we had about a year ago. Now, those that have lagged behind, so these are the carbides, like a couple hundred ISK, so they're very close to the base, to what's being mined there. But the other ones are definitely a bit of a different story. If we go to the other side, here are the metamaterials. For Galente, it's photonic metamaterials. Well, the recovery is here as well for photonic metamaterials, which is our one exception, I believe. But we are back to 10,800 and then just below 10,000 for the buyers. You can see here as well, basically have a recovery. If we take a look at Caldari though, right, you can see here starts here 15, even 17,500 ISK. And while we have increased in price, it's not really that much, 12,400 to 12,000 ISK. And my theory has been that while the carbides were able to really show the problem with supply first, that this would eventually roll over into the more complex materials, but that's just not happening. They're basically adapting here. I think enough supply is now coming in to keep prices in check, and so I think while we have a little bit of a gain from these metamaterials, we're not going to be able to sell at another 50% extra or anything like that. So we had Caldari here, you can see that pretty narrow recovery on this one. Then for Minmatar, it's plasmonic metamaterials that, well, they have a little bit more volatility. There is a higher price range than 10,000 ISK as the bottom, but we are not really at the crazy prices, 13,800 to 13,670. So I can sell. I mean, this is where I placed my bets. I actually bought metamaterials and bought below 10,000 ISK on a couple of occasions or close to that. So I can definitely get like a 20% profit, but I was sort of hoping for a 50% profit. That doesn't look like that's gonna happen here. Then we get there metamaterials for Amar, basically the one that immediately recovered and is now back in that range, but it's also 14,000 for the sellers, 13 for the buyers. So we're not gonna see 20k or anything like that unless something else happens, I think, in game. For the other advanced move materials, we also basically have that same story. While we are up in price from the bottom ranges, we are not seeing like a full recovery or massive volatility here either. You can see here Ferrogel nicely settling in between the high point here and the low point here. So it starts at 30, has a bottom price of 15k and is now selling for around 20,000. Is 22, slightly higher than that. But Fullerides though, full recovery. So that was that pattern that we had discovered. Once you go into the cheaper items that should again be closer to the resources that are being mined themselves, you do have that full recovery, which I was hoping would have legs, would eventually pull everything else up and start volatility. But no, 720 to 661 basically recovered. Hypersynaptic fibers, a little bit more expensive, so not a full recovery, but more expensive. Nanotransistors did try a full recovery here. It's a little bit too much, and so you can see that we're actually not even that much above the low points at 2,700, low points below 2.5. Phenolic composites, same story, bit of overreaction from the markets here, going up to almost 2,000 ISK, and we're basically back at the recovery on the 1 year chart. Pressurized oxidizers doing a little bit better, so those newer items I think are doing a little bit better because they don't have big historical reserves that exist in the game. So pressurized oxidizers, 12,670, that's definitely pretty good as well. And reinforced carbon fiber doing better as well because it's a newer item. And finally we get our ceramic fibers, basically recovery on the 1 year chart as well, from 2 to 300 ISK once again. So value has been protected, especially in the really cheap stuff that's below 1,000 ISK. But while I personally was hoping that we would see higher prices than this, like 1 year high points, and then eventually some volatility in the more complex ones, it does look like basically that nerf has been absorbed quite effectively by the advanced move materials market, and that's, in my opinion, we are stabilizing in the current situation. So that also doesn't bode too well for Tech 2 because their Tech 1 base is becoming cheaper, and we're stabilizing in advanced move materials. So I'm hoping for volatility. There were some signs I was starting, but I don't think we'll see too much of it. Let's take a look at that 3310. and see if I want to sell or buy some stuff in Tech 2. So let's get started. Here is the Basilisk, basically stabilizing at 150 as well. So not a place to buy, not a place to sell in my opinion. Yeah, 148 million for the sellers, 133 for the buyers. Pretty normal spread on this one as well. I don't think we'll see 100 million come into play again, unfortunately. So during these last few months, that's really where you should have tried to buy. I think at the cheapest prices. It's always been what I've done as well. On top of that, I always try to buy things that I would want to fly myself as well, not purely on speculation. So none of it will really become a loss. But now, will we see volatility from these price ranges? Well, it's a little bit tougher to see that happen considering the rest of the market. So here we get the Cerberus that is dropping off quite a little bit all of a sudden. 138 million and 122 million for the buyers. So those minimum prices, let's see if we can show that, did go below 120. So you can clearly see that we're not going to be breaking that. But now that we're below 130, I think if you want to get in on Tech 2 trades, you might be willing to buy a Cerberus at the current in the current market. Especially you can see that 20-day moving average, 5-day below that, daily average is also sinking quite a lot with this as well. It should be possible in my opinion to grab a Cerberus for, let's say, 125 or even below that, which is not a bad purchase even on this full 1-year chart. I think that's what you gotta start to look into, but don't expect the crazy profit margins to just show up, unfortunately. Then we get the Curse, which went down over the last week as well, down to that 130 range. Did jump up a little bit, so someone came in and bought quite a few, but again, I was hoping for higher peaks, and that's just not happening. The Curse is currently at 151 to 140, so you get like a 130 to 150. You get a small trade that you could have made here, I think. But not the big trades that we were hoping for. The Damnation did have a 1, 2, 3 step back to a full recovery at 350 million and is now starting to come down, probably on some more supply. So below 300 now for the sellers and at 244 for the buyers. Again, you're in a pretty good chart to grab one very close to these buy order prices, which is probably a good idea. I mean, we're again at a 250, yeah, below 250. So potentially you are buying very close to this range here again. But I'm not going to guarantee you that you're going to get a quick sale out of anything like this either. Then we get the Deacon, very late spike back to the full recovery at around 30 million, which of course, as expected, is going to come back down on supply. 20 million now for the sellers and 19 million for the buyers. And so yeah, you could have bought these well below 15 million up until very late into the game. So this is a trade that was a little bit expected and definitely doable. But as I've mentioned, while this is nice, this is exactly what we're actually looking for. Buy at 15, sell above 25. You had a full week to do that. There's definitely a very nice trade. Unfortunately, I think that we will again stabilize at a new range that's going to be higher than these bottom prices, but still not more volatile across the board. Then we've got the Eagle. It looked so good. First peak here, second peak here. And at the moment we are coming back down, so we're below 130, I think, for the buyers, yeah, at 123. So potentially you do have the jumping point here now for the Eagle, but will we see like a 180 on the next increase in price? That's a very big gamble to take. So Eagle, you could also definitely look into buying one if you want to. I wouldn't buy more than one at this point, especially if you're actively trading. EOS holding very well at that 300 million, so 297 to 275. That's not enough spread, so we would need to see this decline sharply before we jump in. But that pattern is quite nice, right? Cerberus 5-day and daily starting to drop off a lot. You get a buy opportunity. Eagle doing the same thing. Deacon, you had that sell opportunity, so that is pretty nice. The Aries is actually stabilizing at 50. Buyers though coming into play at 40. Yeah, 41 for the buyers, 50 million for the sellers. So again, here we were looking like 30 million as jumping points for the Aries. That's probably not going to happen again. But if there is more supply here, unfortunately, supply is dropping off already. and we would go below 40 million, that would be like my trigger to say, yeah, the Aries jump in below 40 and then try to sell at 50-60 is definitely not bad. Flycatcher also starting to come back down quite substantially, below 40 for the sellers, 36 million for the buyers. Even on this full 1 year chart, this is not a bad place to jump in. So if you want to do the take two trading, this is the chart to look for. If you haven't already, because I already have several flycatchers myself that I bought on some of these dips here. So I'm not gonna jump in on this one again, but you actually have another buy opportunity here. Then we get the Guardian that is recovering again in 3 steps, so doing new highs. That's definitely not bad for those that bought Guardians below 100 million. Can sell now at 145, 126 for the buyers, and you could have bought these below 100 million 1, 2, 3 occasions, probably, maybe even 4. But here is one of those 50% trades, but on the long term that are happening. Unfortunately, I don't think we'll start to see the really big swings here. Then we get the Heretics slowly stabilizing at 40 million on average. Buyers actually just following suit, not dropping off. So this is not the best. 41 for the sellers, 35 for the buyers. Basically here, if you bought below 30 million, I would take that 10 million and I would be looking to unload without spooking the market. Then we get the Hound, which again also had this nice volatility, one here, and then even one in January that looked like, yeah, perhaps it is going to happen, but you can see how now we're nicely stabilizing between the 15 and the 20 million. So you could have jumped in below 15 quite often, sold at 25, so there's a couple of trades, but unfortunately we're now at 18.5 million for the sellers, 16.5 for the buyers. Pretty narrow spread, quite a lot of supply, but nothing all too crazy, so we're not cratering the prices again to 15 million. It's gonna be pretty tricky to find the new ranges and then to find the volatility as well. Equiteurs are doing a big turnaround here though. Look at that, selling all of a sudden for 570 million, 505 for the buyers. If I'm not mistaken, in the monthly economic report, at least on the subreddit thread about that one, it was mentioned that activity has increased a lot or recovered a lot in Triglavian space. Then we get the Ishtar, stuck at 150, 152 to 144. That's not exactly the place to be for either buying or selling. The Kirin had a bit of a dip, but it's just unfortunately just slowly recovered back above 15 for the sellers. 15.5 to 14 million. So that is another no, unfortunately. Right? You would have hoped that we could break out to 20, like what happened with the Deacon, or even 30. But that unfortunately is not happening here. Then we get the Manticore. Are we below 15 for the buyers? No, we're still well above that, 17 to 16 million. So again, where you could have bought like below 15 here, below 15 here, very close to that as well. And you got a little bit of volatility. So here you had one trade. Now it's harder and harder to see that 15 million come into play. And we're still not seeing the volatility that we were hoping for, or that I was hoping for, perhaps I should say. Nemesis is back below 15 million, but this one had low points at 12.5 throughout the last year, so we're definitely not there yet. 15.5 to 14 million. Nope, don't like it. Nighthawk currently at 320 to 294. No, basically if you bought below 250, you've got your sale. Then we get the Oneros, very nice sell opportunity here at 180. You could have bought these for below 100 million quite often. And we're now basically recovering at 150 to 141. Very narrow spread, fully recovered on the 1 year chart. You could still sell at your profit, of course, but are we going to expect like 200 million to come into play in a couple of weeks? I unfortunately don't think so. Purifier here, same 1, 2, 3, nice sell opportunities. Buy below 15, sell close to 25. We're now at 17.5 to 15.5 million, so very narrow spread. The in-between place, and unfortunately if we don't make new highs here, it really does look like volatility could already be on the decline again. Rook stabilizing above 150, so we're at 160 to 127 for the buyers. That's a bit of a surprise. Just completely no buyers into the market. Now, unfortunately, you can see how the 5-day moving average and the daily averages are above and around that 20-day moving average, and so you can see from these minimum prices that you're not going to get a 129 million rook on the books all that easily, but there's definitely not enough demand. So on new supply, if this starts to turn around and shows this type of a chart, then you could be looking at an interesting jumping point for the rook. Then we get the saber, that's only just crossing, buyers are at just below 35. It's definitely not bad on the 1-year chart, but unfortunately again volatility is declining rather than increasing. Scalpel stabilizing here as well, just above the 15. 16.7 to 16 million. Yeah, so here is that sell opportunity, and that's it. Scimitar make its way back to 150. All right, 149 for the sellers, 127 for the buyers. So I'd say this is your sell opportunity for the Scimitar if you bought close to 100 million. I wouldn't take my chances anymore at this point. Sleipnir just past its sell opportunity. Again, so you could have jumped in well below 250, sold at 350. We're now at 310, so you can still sell at a profit. 265 for the buyers is above those old jumping points. So we're basically coming into right in the middle. On the chart, then the Vagabond up a little bit, but yeah, again, I was kind of hoping we would be able to break 180 on the next upswing, and that is really not happening. And then finally we get the Zarmas, that's also up a little bit in price, back above 500 million for the sellers at 506. So for the Take 2 ships, I would say that I personally am going to start to take some profits off the table. And that it's all about looking for those buy opportunities. Again, the chart is often quite recognizable. 5-day moving average cratering down, daily averages even lower than that. And that's usually just, you know, too much supply that's coming in compared to the current demand, creating that buy opportunity. And then the name of the game will be to try and spot what those new price ranges are where you can jump in. But I think we'll have to be happy with small trades, not the 50-100% increase in price a week later because something big happened in Nosek or there's a big disruption in the supply chains or anything like that. All of that has been quite easily absorbed. I think we're back at the prices we were about a year ago, so there is no reason to expect all of this to get out of hand in the Take 2 ship markets to all of a sudden create supply problems that could mean very, very high prices. So we can still hunt for the cheaper stuff. We can look for those sell opportunities, but I think we have to be happy with what we're getting even now. Next up, the Take 3 ship market coming in at 46.25. Let's get started as always with the destroyers. Here are the Confessors back above 50 million, and unfortunately the spread is just following suit, closing the gap very quickly. 51.8 to 49 million, very narrow spread, not a lot of supply despite these higher prices. So I don't think we're seeing too much action just yet. A little bit of action here in the Hecate market with the spread maintained itself from like 60 to below 55 million. That is quite decent. We are now at 59 million to 52 million. That's well over 10%. It's clearly on, I think, a lack of supply. There's a little bit happening in the perimeter, Tranquility Trading Tower, but it's really not that much. So we're trying out the Hecate market that is causing a little bit of volatility. Volume is actually holding on better than what I would have expected, considering that fact, considering the amount of sellers. Jackdaw doing a 1-2-3 step up above 55 million as well. 58 for the sellers, 55 for the buyers. Now I'm kind of wondering if this has something to do with either maybe a Nosek meta, but I don't see the volumes for that, or that this could be event related. Are people preparing for an event maybe again around the 14th, where some of these ships excel at. That is possible. Let me know in the comments if that's a possibility. And even this Vapel actually going above 50 million. Did not expect that. So actually in Jeddah, 53 to 52 million first buyer. Okay, someone seems to know something I don't, and perhaps it is event related, where, you know, Jackdaws are actually incredible ships for certain parts when there's like a lot of small ships and there's not too much incoming DPS, but you want that speed actually to go after a certain loot goal or something like that. It definitely has its place. Hecate and Confessor can compete with that, but at closer range. So perhaps that's what's happening here. That's my speculation as to why we're seeing these higher prices. Still, in my opinion though, not something that I want to trade just on non-special event related activities. In the cruisers, that's a little bit different, although all of this is stabilizing as well. Here's the Legion, just stuck just below that 200 million mark, with the spread actually decreasing here over the last couple of weeks. 200 million for the sellers, 189 million for the buyers. Then we get the Loki chart. That's a little bit better, but we're still very expensive. 205 million for most sellers, so definitely above 200, and also just at 189, so that spread is not big enough to actually be trading. Then we get the Proteus. That's a different story. You can see we went up to 230. We are coming back down. Unfortunately, buyers are still at 184, 195 to 184. So that's again close to that 10 million spread rather than 15 or 20. And we're not coming below the 180, which is like, okay, we can definitely move in, grab Proteus, and then sell at a profit later down the line. And the Tengu is also holding very well at 200 million, 192, and that's even the smallest spread of the bunch for the Tengu. Again, could be event related. Tengu, amazing PvE platform in my opinion, so we are looking at very nice prices. If you still have a Tech 3 cruiser that you bought at a cheap price and you want to take your profits, this is probably the time to do so, as if we're then expecting a wave of a lower event activity, it's probably after the 14th of February, and so we might see some declining prices and buy opportunities then. But I would still place my bets in the cruiser market rather than the destroyer market at the moment. And then finally, for the extra product of the week, I'm going to take another look at the fuel blocks at 50.45. My main thinking here is that you still need a lot of fuel blocks for the bigger production items, so capital ships and everything that's below that. You do need quite a bit of fuel blocks for that. And so my thinking is, can we spot something here? So I definitely feel like we can here, at least in the helium fuel blocks. You can see just a couple of weeks ago, 1 year high point costing almost 18k. Ooh, above that, 18,600 disc. And we have turned the corner. Volumes are still very, very strong, and we're still pretty expensive on the 1 year chart. 16,400 for the sellers, 16,000 for the buyers. But this does feel like we had very, very high activity, and just they were desperate for fuel blocks. They were willing to pay 18,000 disc for a fuel block just to keep the furnaces running. And it does look like we're past that. Let's take a look at hydrogen fuel blocks. Also had a high point right here mid-January at 17.5, and it looks like we are again past it. We're still super expensive, highest range for the year, except again for that peak in January. So here we're at 16.2 to 14.8 though. 14.8 buyers starting to drop out of this market again. Nitrogen fuel blocks, same 1 year high point here mid-January, and not giving up just yet. 16.6 to 15.9. So here you can see buyers are still very much into that market. Same thing with oxygen fuel blocks, 1 year high point mid-January, 16.4 to 15.8. So bit of a mixed picture on this one. It's gonna be interesting. I think it's gonna be interesting because this is again a couple of them like oxygen and nitrogen that are holding on quite well to this higher range. So a lot of demand, and definitely showing there is activity behind all of this. Probably a lot of capital ship production behind, maybe also structure production, etc. Behind all of this, that's holding well, but clearly a little bit of a shift in the mood in the hydrogen fuel blocks and in the helium fuel blocks, with the PI also where our refined PI materials are showing some signs of exhaustion, I think, from the buyers, although we're also seeing a little bit of oversupply in that as well. It's really difficult to say if there is a little bit of decline in that very, very heated production cycle that we are in at the moment, I would say, in the game in general. So it's gonna be interesting to see what happens next, but we're in a pretty nice spot still with very high prices, fuel prices, PI prices. Minerals are struggling, that's pretty obvious. But PI is still doing really great, and we'll have to wait and see what the next leg in this adventure is. But yeah, that's it for this Eve Talk, guys. Thank you very much for watching, and as always, I'll see you next time.